In this video, I'll show you how to use Ethena, and I'll explain their product, which is USDe, which is probably what you're looking at if you're wanting to use Ethena. So I'll link Ethena down in the description below, but it's ethena.fi, and then go to Launch App. And then from here, we want to connect our wallet. I'm just in the Earn tab here. So top right-hand corner, I'm just going to connect my wallet. I've got a Rabbi, but any Ethereum-based wallet is going to be fine. So as long as your wallet can use Ethereum or the layer 2s on Ethereum, that's fine. You can connect it to Ethena. The USDe is built on top of Ethereum and Ethereum style chains. I think it maybe is on Solana as well. You have to look at that if you're using Solana. But definitely Ethereum is the kind of main blockchain that Ethena sits on. And if you want to use their products, which is USDe and staked USDe, in other DeFi protocols, most of that is on Ethereum and Ethereum mainnet. So from here, we've connected our wallet. And what we need to do is get some USDe. That is the main product here, right? Which is, it's not exactly a stable coin. And I'll explain this more in depth in a second. But what it is a dollar that pays some yield. So if you give $1 into USDe, you can stake that and earn some yield on that dollar. And then if you want to withdraw that dollar, they should have that dollar to pay you back. It's not exactly a stable coin though, so I'll explain that in a second. But what we want to do is get some USDe in the first place. So you can do it on the Ethena app if you want. Go to swap up at the top here. And as you can see, if you press swap, then from and to, obviously we want USDe here, but the from icon here, we can just click this and you can see that it exists on many different chains. So if you've got any of these chains, it's going to work. BNB, Arbitrum Base, Ethereum mainnet, and some others here. So I've got a balance on the base network. So let's go ahead, choose the USDC that I've got on base, and I can just use the DEX to swap into USDe. I can press an amount here like this. It shows me exactly how much I'm going to receive and everything. So I can just review and then essentially, spend some value into USDe. If you have ETH or anything else, you can just swap here. It's a DEX. So you're just literally buying the USDe. You can do that on Ethena. You can also go to Uniswap or 1inch or whatever DEX that you use. You probably get a better rate there as well. Some centralized exchanges also have USDe, like Binance, Bybit, I know have them, maybe some others. I'll leave some links below to the exchanges I use that have USDe on there. You might be able to get some good deposit and trading bonuses if you're a new user there as well, if you're buying USDe anyway. If you've got USDe in your wallet now, it should be valued around $1. The point of this asset is to stay around about a $1 value, and they will trade and have other market makers and traders and arbitragers who will keep this dollar value very, very close to $1. Now, dependent on what's happening in the market or if people are, trading on different exchanges, the value may fluctuate over time a little bit, right, until the arbitragers come back in and then obviously try and arbitrage the difference between the price of USDe and that $1. The point of this is that it's supposed to be backed by value that is $1, but it's very different to USDT and USDC, which I'll explain. But once you've got this USDe, that's just $1, or it's supposed to be the value of $1. If you want to then get the yield from Ethena, go to Earn, and you need to stake it. So you can go to Stake here, stake the amount of USDe in your wallet, and that will switch into SUSDe, which is staked USDe. So then you're getting the yield from the strategy that Ethena are carrying out. You can see that the current APY is 2.4%. Now it's been higher than that. As of right now, the strategy that Ethena carries out isn't paying the highest yields. Actually, the highest yields will be probably in bull markets. And so you can see if on the 3-month, the staking reward is 6.9%. In 2024, it was 19%. That was a good year. Rising prices, so the yield was very high. Over the last week or so, prices have been falling a bit in crypto, and so the yield hasn't been as good. But over time, that will even out. And for the most part, if you want to use USDe and staked USDe in other DeFi apps, then you need it on Ethereum mainnet. For example, in Aave, you can see I've searched for USDe here, and you can supply USDe to Aave at the moment for 5.81%. I think you get some tokens here as well as an incentive. But if you go to other blockchains like Base, it's not there. If you go to, for example, BNB chain, it's not there, right? So if you want to use it in different apps, you'll have to put it on the Ethereum mainnet. That's fine. Ethereum mainnet's not that expensive these days, so it should be absolutely fine. But you are getting the yield that Ethena pays out from its strategy. And so I'll explain that now because it's very, very different to a normal stablecoin. USDe is often referred to as a stablecoin, and it's often treated like one in crypto, but it certainly isn't. USDe is representative of your money that you've invested in a trading strategy that Ethena is carrying out called a delta neutral trading strategy. That's completely different to a stable coin. So something like USDT and Tether, you give $1 to Tether, they'll turn around and just buy a treasury bill with it. Very, very short dated treasury bill, which is known as a cash-like instrument. So you can say that it's 1-for-1 backed with cash. So that cash that you give Tether when you buy USDT, they have that backed with cash. So it is a 1-for-1 representation of dollars, essentially. 1-for-1 backed. There's no trading strategy or anything else. They literally just buy treasury bills from the US government with your money, and that's it. Now, Ethena is not doing that. They are creating a synthetic trading position which should not move in price, known as delta neutral, meaning that the price of their trade shouldn't win or lose, right? So if you give them $1, they will trade, and the long side and short side should cancel each other out so that the dollar actually doesn't make or lose any money. So what they go and do is they take your dollar and they actually switch it into ETH and BTC. And they go and buy those assets. Now, if they just bought those assets, then that's volatile, right? So you could turn up 6 months later, Bitcoin's fallen 50% and your money's not there, right? So they don't want that to happen. They're trying to create this $1 instrument, right? So how do they do that? They buy an amount of ETH and BTC in spot, but then what they do to make it delta neutral, to make sure that their trade doesn't win or lose, is go over to the futures market and they take a corresponding short position or a sell position. So what that should do is essentially cancel out 1-for-1 the buy and the sell, so that if the price moves up, one of the side wins and one of the other side loses. And if the price moves down, one side loses and the other side wins. And they're supposed to cancel each other out so that their trade is delta neutral, meaning they don't make money or lose money in that trade. They have that 1-for-1 right there. So that if you give them $1, 6 months later, no matter what's happened to the price of Bitcoin and ETH, that dollar should still be there for you to take out of the protocol. That aims to keep USDe at this $1. In that the trade that they're making shouldn't win or lose any money, known as a delta neutral trade. Now, when you stake USDe to get staked USDe to earn that yield, the yield that you're earning is this. It's called the funding rate. Now, in the futures market in crypto, there is this thing known as the funding rate that tries to keep that market in line with the underlying spot prices of crypto like BTC and ETH. Now, that funding rate can be positive or negative. If the funding rate is positive, that means that their short futures position actually earns the funding rate. And that is the yield that you get when you're staking USDe. So this 4.2% or 2.4, whatever it is over a certain amount of time, that yield is paid via the funding rate because they have a short trade in futures. And if the funding is positive, that short trade is essentially earning that funding rate. That funding rate can change dependent on what prices are. So usually when prices are bullish and moving upwards, then the futures market will have positive funding, meaning that they're going to be earning a lot on their short trade. So that's good news for USDe, and if you're staking it, the yields should go up on it. Funding can also, though, be negative. And that often happens with sideways prices, or if you're in a bear market, then prices will fall and funding can go negative, which is actually when the short side of the trade actually has to pay out some money for the funding. So this short side of the trade could actually be spending money out then. So this yield that you're getting is not dependent on treasury yield from the government or anything like that. It's literally dependent on what funding rates are in the crypto market. Now, for the most part, funding rates are positive. So usually you're going to be seeing a positive yield here, right? So they're going to be taking that in and creaming it off the top. So that's the yield that you get. But in bear markets, it could be very low yield. For the most part, in big assets like ETH and BTC, funding is mostly positive all of the time. But there are areas where you can get negative funding. And so that can just reduce the rate that you get. So just to know that this has nothing to do with US dollars or cash. This has everything to do with a trading strategy that helps or tries to keep this delta neutral. And it's up to the funding rate whether you're getting high yields or no yields at all from USDe and then the staked USDe. The risks and considerations then of owning USDe and staked USDe are entirely different than owning something like USDT. So we are essentially invested in an on-chain hedge fund, right? Which is taking out a delta neutral strategy, trying to cream some funding rate off of the futures market, which is a very common strategy. But you can see that really what you're doing is putting money into a hedge fund rather than owning a stable coin. Now, what you can go and do is go to dashboards here, and it will show you exactly what their trades are doing as well. So what they do when they take dollars is they take those dollars, they buy Bitcoin and ETH, they carry out this strategy, and for the most part, they trade on big centralized exchanges, right? So you've got an extra risk here as well, because with the centralized exchanges, now, a lot of these have been around a long time, right? Binance, Bybit, OKX is really where they mostly trade. You can see that they've got some BTC on these platforms. They've also got some ETH and ETH liquid staking derivatives here, which should be the same value as ETH for the most part. However, those rates can also change a little bit as well. They don't really have any SOL, a tiny bit of SOL here that they're doing it on as well. And they're trading on these three exchanges for the most part, as you can see. Now, what they also do is keep the assets off exchange. So they use these two custodians here, which is Cefu, which is from Binance anyway, and this one right here. I'm not sure who this is, but it's another custodian. So what institutions now do to protect their assets is to actually not put them directly on the centralized exchanges. They use custodians off exchange, and then they mirror the assets on the exchanges so that they can take trades, but not having the centralized risk of having the asset on the exchange. Because if you have an asset on an exchange, the asset is then the exchanges. Now, if an exchange goes bankrupt or bust or something happens, your assets are then tied up in that exchange, and that's a total nightmare for this trade. I mean, USDe would trade down like 99%, right? Because you've got assets tied up, no one can get out. So that's an issue. So that's why they use these custodians and then trade on the exchanges. However, it's complexity and risk, obviously, versus just holding something like USDT. So what they do is they go and buy the assets, and then in the futures market, they take the corresponding short side. You can see the protocol backing now is over 100%, as you can see. This is the total supply. And so if everything goes well, they should just have the dollar there for you, and they're taking some yield out of the short side of the trade for the most part. And then, of course, if you want to withdraw, they should be able to just unwind any trade and then just give that dollar back to you. But there certainly are other risks here that you have to take into account versus a normal stable coin. Because USDe is supposed to keep a value around about $1, the point of this asset is to use as collateral when you trade. So rather than using something like USDT or USDC to trade, people have used USDe because USDe pays yield. You can use staked USDe and actually be earning some of that yield whilst holding dollars. And on some centralized exchanges, they've started integrating USDe as well. So for example, on Bybit, if you want to trade and you use cross margin, you can use USDe as the collateral asset. And I think for right now on Bybit, they're paying maybe 4 or 5% for holding USDe. Now, the reason people want to do this is because if you're using dollars to back your trades, something like USDT doesn't pay any yield. And so if you're using USDe, whilst you've got those dollars funding your trade, you're earning some yield back. And obviously that's what traders will want to do for capital efficiency and everything like that. Now, the downside potential of this as well is that USDe is smaller, and the strategy that creates this dollar is very, very different to something like USDT. USDT is highly liquid. And what we saw recently is that there was a flash crash within crypto right here, and USDe had some issues on some centralized exchanges, and the USDe itself started losing that dollar value. And so the collateral that people were using with USDe was starting to fall, which means that if their collateral value is falling and the price of their trades is falling, they can start to lose money and get liquidated at a faster rate, rather than having the dollar that they thought was there, it wasn't there, right? The price came down. So there are some issues around that. That's not to say that USDT and USDC haven't had those issues in the past as well, but the mechanisms and the value behind this is very, very different. And so USDe actually after this recovered its peg very, very quickly because nothing had changed, right? And so you just get people arbitraging the difference. I mean, you're buying $1 at 90 cents, then that is going to push the price up. But short term, that created some issues. And again, that has been in other assets as well, but just something to know about if you're looking to use this asset as collateral is that what you're doing here is you're taking $1 value, you're trying to earn some yield, but there are some extra risks involved. It may or may not be worth it to you to do that. Ethena do have a second stablecoin product as well, known as USDtb. I believe that this is a more traditional product where they just take $1 and they invest in a money market fund. I believe they use BlackRock's Buildle fund, which is an on-chain money market fund. So That'll be dollars in treasury bills custodied at BlackRock, and they issue that on chain so that crypto institutions can get in and out easily. But it's essentially $1 in a money market fund. It doesn't pay interest, and so if you're going to be using this, then you may as well use USDT or C, which have more support, and it's basically the same thing. So if we look at USDe on Aave, on the Ethereum mainnet, you can supply it here, staked USDe as well, and some other DeFi applications use this product, but it'll be mostly on Ethereum mainnet and some of the scaling layers. If we look at USDtb, that is supported on the Ethereum mainnet as well. You can supply it for some yield there. So that would be lending the stablecoin to other people there. If you want to know how to use Aave and some other dApps that will be associated with Ethena stablecoins, I'll leave those below. The deposit and trading bonuses to the exchanges I use that also offer USDe, I'll link them below as well. I'm James, this is MoneyDG. Cheers for watching, and I'll see you in the next one.